Good morning, afternoon, and evening traders from around the world. I hope you've all had a fantastic week so far in week 47. You're ready to rock and roll into week 48. First things first, as far as bank holidays go or anything like that, we don't have anything going on this week. It's an open week. We're kind of back to normal after Thanksgiving and all of that. People might be a little bit groggy coming into this week, but for the most part, everything's sort of quote-unquote back to whatever normal is these days. As far as the news for the week today, for the rest of the day at least, for Sunday, we've got the OPEC JMMC meetings. Going into Monday, the OPEC meetings continue. That's an all-day event there. At 9:45, they have the Chicago PMI, and then at 10 o'clock, pending home sales month over month for that. Where are my... There's the estimates. I was going to say, where'd they go? So looking at the Chicago PMI, the forecast is 59.4, and the pending home sales is forecast at 1.1%. And that's it for Monday. On Tuesday, they've got the final manufacturing PMI, medium, small-ish news announcement, not really a big one there. The big one's going to be at 10 o'clock, Fed Chair Powell testifying, as well as the ISM manufacturing PMI. That's forecasted at 57.7. Going on a little bit later on Tuesday, all day, that's Ward's total vehicle sales, and then at 12 o'clock, FOMC member Brainard speaking. On Wednesday, we do have one large announcement again at 10 o'clock, Fed Chair Powell testifying once again. At 8:15, they have the ADP non-farm employment change, forecasted at 500,000, and then the rest is just a bunch of small news announcements, not much going on there. On Thursday, all medium to small. At 8:30, we've got the unemployment claims forecasted at 770,000. Then at 10 o'clock, the ISM services PMI forecasted at 56. And then on Friday, which is really the only big day as far as news outside of OPEC, at 8:30, we have the average hourly earnings forecasted at 0.1%, non-farm employment change forecasted at 500,000, and the unemployment rate forecasted at 6.8%. We also have the trade balances and all of that. But realistically, those first three, those are going to be the big ones going into Friday. So that's kind of the news. And it's a relatively calm week as we start getting into the middle there. But Fed Chair Powell testifying, kind of keeping things going. Hopefully, with things getting back to normal, we'll see some pretty decent volume, some pretty decent volatility. So let's take a look now that we can dig into some charts for the week of, week 48, 11:30 to 12:04. All right, first up on the list, we've got the NASDAQ, and overall, the NASDAQ is still moving nicely higher. We've had a little bit of that potential of kind of a rising channel, but then we had that funky gap that happened, back on 11.8, and that weird gap initially looked like they were going to just pile drive the market higher, ended up rolling over and falling on its face, and now that we've got this move back up, it's higher low, tries to transition, right? Sellers try to come back in, sellers try to come back in, they try to come in, we start holding this wedge, and then they lost it. And that big breakout move, I think, is a pretty telling story. The sellers lost their grip. We tried to get the sellers to roll down, and they failed. There's probably a lot of sellers who are still stuck short on this move, and eventually there's going to be a pullback, and that pullback is going to be, I think, probably the biggest point of interest for buyers to come in on. The hope, obviously, is that there is a pullback. It's getting really close to those highs, and it wouldn't necessarily be unheard of to see it just uncork and go nuts and start breaking back above towards those extremes not too far away. So the way that it's looking is very nice and aggressively bullish, but really I think it's going to be more of a benefit for buyers to wait for a pullback back to the base, back to the bottom of the channel, back towards those 12,100s, 12,000s, just kind of a retest of that magnet. Where it is right now, although it is very, very bullish, it's just so far up. It's hard to want to be long way up here. Not to mention it's running into the previous swing highs. There's a lot of issues up here. So I think it's going to be better off to wait for the pullback to be a buyer down here. Doesn't necessarily mean it'll happen, but that's kind of the hope. Now, if it does want to continue back to the upside, then realistically, we're going to have a breakout pullback continuation type move. So from the bottom edge of things as far as support, the support zone is going to be really kind of floating around these 12,059s. We can make this a little bit bigger here. That's going to be the zone of interest at around the 12,059s. And if it does want to dip a little bit further down, then obviously a little bit further towards those 11,822s. If it does want to go a little bit further up, then we're going to start pushing back into those highs. And that's where things are going to get potentially a little bit messy. Change those to red real quick here. Then we start running into those previous areas of resistance, which might cause some problems. So we'll have to wait and see what they want to do when it starts pushing up here. But when it starts getting up towards those 12,400s, 12,500s, there's a lot of stuff going on up here that's going to cause some issues. I'm just basically hoping for a pullback at this point before it wants to blow the top off, because where it is way up here, it's just a little bit too high for me to want to be a buyer up on top. Next up, we've got the S&P 500, and overall, it's, before we've been talking about how the S&P has been showing, or at least demonstrating, a lot of signs of more strength than we've been seeing on the NASDAQ, but now we're starting to see a little bit of a problem with that here. We're not getting as much strength to the upside, and we seem to be going a little bit more range bound. And the big obvious thing that we're running into is the bottom, these two zones right here. If you take that level, that line, and transpose it up towards the top, this is the level that you get, and you get that, that was a perfect arrow. This is that line that you get on the top, and we're getting stuck on top of that area. They tried breaking above the highs, failed, tried breaking above, failed, and we just kind of keep skipping off of this zone. As long as the buyers continue to fail this movement at the highs, it's much more likely to see them want to pull back down towards where we found support before. Realistically, this would be nothing more than a breakout pullback of a wedge, so we broke out. Now we're waiting for the pullback. A nice little zone of interest would be back towards those 35.50s, or preferably even a little bit higher, a little bit further up, but preferably a little bit further down towards like the 35.40s. But that whole area is going to be a zone of interest. As soon as it starts coming down, that's where buyers are going to start trying to get in. The problem, though, is that if 3,500 doesn't really hold and it starts kind of getting broken underneath, you can see how there's not really anything to hold the market up. It's just a wide open door, right? And whenever you've got that wide openness like that, the market, it typically runs through it pretty quickly. So because there's nothing structurally to hold the market up, if 3,500 doesn't hold, I mean, it might poke through it a little bit. But if they can't really get it back up again, then there's not much to hold it up until we get back down towards the 3,300s. And that's where things start looking really interesting, getting down towards the 3,300s from a buyer's perspective, because that's when things start getting back down to quote unquote, at least cheap, cheaper, rather than buying way up at the top where it is now. Whoops. But looking for a deeper pullback to become more interested. It's obviously very top heavy. It's just up to the buyers to see whether or not they've got enough oomph to break through the highs, get through some of this resistance and charge on up, or if they're going to fail at the highs and get that deeper pullback. Now over to gold, where we're seeing some pretty vicious downward momentum. Gold got absolutely dumpstered at the beginning of November, and now we're seeing a continuation leg to the downside where we've got a bit of sort of a descending wedge, and we're fighting over a lot of stuff down here. Now, if we zoom out a little bit, you can kind of see what all of this is coming from. We've got a nice falling resistance from across there. It's kind of shallow, so I can't really draw, but you can see the nice little retest of resistance. And then along with that, if we draw a falling channel top, you can transpose that down, those yellow lines, and that would give us a reason for that support, which is now just broken through. As far as the resistance on the highs, possibility of a wedge top as well. But where we are, this is where we're going to have to make a big decision. Now, the big decision is going to come from either the buyers or the sellers, obviously. But if we can get a little bit of a slide down, the big zone of interest is going to be down here at the 1737s. If we can get a flush down towards the 1737s, that's where a huge amount of support that's come in previously is going to be looking to regain some traction again, right? Huge amounts of support resistance all in the same spot, all over the place on this area. So it wouldn't be a surprise at all once we see gold getting back into these 1750s, down into the 30s, the 20s, right into those lower areas. That's where we're going to start seeing that support coming back in again. So that is a huge zone of interest as we go in towards the week. As far as resistance, when the market does want to pop higher, because eventually it will, we've got an area of resistance. Initially, there's probably going to be some shallow resistance around those 1820s. It wouldn't be a surprise, but the big zone of interest is going to be a little bit further up around those 1850s to 1860s. Lots of really nice meaty swings down here to work with, especially with such a clean breakout. There's likely a lot of longs, like we were talking about last week, how longs were really trying to get it going. They're still stuck. They haven't had a chance to get out yet, and I'm sure they would love a chance. So if we can get a pop back up here, that first attempt is probably going to get faded off with those buyers getting out of break even. The response to that is going to be the important part. If they hold a higher low, then we've got a shot at reversing back up towards at least 1900s, maybe a little bit further. But if it fails there, then we've got those downward prices. That's looking a little bit better towards the 1737s or so. And if it wants to dip through that, well, then, I mean, realistically, you've got 1650s pretty far down underneath that. So buyers are obviously hoping that it doesn't crack down that far, maybe, unless they're looking for a fire sale. But as it stands, you know, we're kind of in that tipping point. We've got to see, what do they want to do? We're potentially trying to set up some stochastic divergence. Looks like there's a little bit of RS divergence going on, and maybe MACD, but MACD is always way slow, so it's going to take that another week to probably catch up anyway. So we're seeing some signs that buyers are trying to put in a bottom here, but no clear sign of reversal yet, which means that the bears are still in control, even though it is real low down. Over on crude oil, we've got some pretty decent range-bound momentum going on here. Buyers are attempting to break the highs, and so far not really doing too great. Obviously, I mean, we had a pretty good move above 44, but now it's kind of running out of steam a bit, it seems like. Maybe just waiting for a bit of a bounce off of nice higher low support, this rising channel coming into play here. But realistically, the big thing that stands out here really comes from when you zoom out. And when you zoom out, you can see, first off, from this picture, this is a huge range. And from the range, we had the highs, we had the lows, back to the highs, tried to mess around with the highs for a little bit, kind of wedged up, and then broke underneath that. Then we created a low and tried breaking underneath that, and that failed too. And now we're going back up. So realistically, with this big failure underneath the bottom, one big thing that usually is going to happen is a swing back to the other side. When you crack one end, it usually goes to the other. We cracked one end and it failed, it's probably going to the other. Well, we've gotten back to the other. It's broken back above there. So now that we're back above 44, this is where buyers really need to try to hold price up. We've seen a huge amount of resistance at 44s, 43s, and not really anything from the buyers before. Now, this time around, they came back and they showed up with a big amount of steam, breaking above the highs with almost nothing stopping them. That's a good sign. That's a great sign for buyers to try to keep this going to the upside. And if they want to, then we've got some potential larger upside objectives back towards that big dreaded $50, right? That big, huge $50 mark has been a pain in crude oil's side for quite a while. And that's going to be kind of the next stop. We're hovering around the highs. There's obviously a huge amount of resistance here at 45. But if it can break higher, there's not much holding it down anymore until we get up to 50. If it does want to break down, though, we have support at 42. That's the next major zone of interest that we just broke out of, that range high, acting as support. And then below, underneath at 37.50s, towards the low of that range, if they're going to challenge it from that perspective. But realistically, this trap on the lows, as long as buyers can keep this going to the upside, it's looking really strong. They just better hope they don't lose grip because, well, it's a pretty wide open door all the way back down, and then things get a little bit scary. Over on the euro, we've got a pretty good sideways price action move going on here as well, but buyers trying to break back up towards that huge psychological 1.2. What a shock, right? Now, as far as the overall movement goes, very similar situation to what we were just talking about with a decisive trap on the lows, big obvious trap on the bottom. That might have fit a little bit better for a 3-press bottom, which has its benefits, but it was a big pierce below the lows that quickly failed, and they're usually going to the other side. Well, where's the other side? The other side's up here. It hasn't made it there yet, so the likely objective is for bullish continuation back above that 1.2, likely up towards that 1.205. Where it is right now, we're kind of breaking back above the middle of support resistance here, the channel, and trying to get back up towards the highs. So it's looking pretty good. This is where buyers are coming in, big gapping after the weekend gap to the upside. It might find some bullish support if it dips back there. And again, you know, the breakout point that it's breaking above 1.92, 1.93, the breakout pullback zone coming back to there will also be a zone of interest. So everything kind of stacking up around that midline if it does want to pull back. The market's looking poised for a really nice move to the upside. It's got plenty of room to do it. It's just a matter of if they want to do it now or if they want to get a little bit more of a pullback first. The first obvious zone of interest is at 1.927, but if it does want to get back down towards, maybe the lows of the channel, that could also be an area of interest. If we zoom out, if it doesn't really hold these highs, then we're probably failing on the larger range, which would mean we're going to cycle back down towards the 1.164s, 1.165s. So I don't want to see it lose too much ground underneath here, because then that becomes a bit of a problem. So far, buyers are looking strong. They've just got to maintain and sustain so they can keep their ground up here. And then finally, we've got Bitcoin. And Bitcoin seems like it's all aboard last stopsville before we start cracking out through the highs, because this move is incredibly strong. This is usually the type of move, and this is something that Bitcoin's been doing the whole way up, so it shouldn't be any surprise that it's doing it again. We had a big flush down, huge flush down, bulls came right back in. Big flush down, bulls came in. Shallow flush, not much. Big flush down, buyers come in. Big flush down, buyers came in. What a shock, right? It took them a little bit longer, but realistically, it's the same thing. Right? It's just a little bit wider. Now we've got a nice rising level of support that's coming into play. Buyers are holding that support very nicely, and we're getting up towards the highs of resistance. The first zone of resistance will be obviously that inside swing high, which is right where price is now. So buyers do need to muster up a little bit of strength here, because up towards all the way up to the 19,000s, 19,500s is going to be a bit of a struggle. There's a lot of crap up here that the buyers are going to have to deal with, and they're probably going to see buyers taking profit, which is going to cause the market to kind of falter a little bit. What you really want to see here is the market not to pull back so much as go sideways before regaining momentum, right? Buyers feeling like they're on the back foot, so they're buying really aggressively and holding higher lows. Because right now, the way that it looks is that this move down likely got a lot of shorts interested, and a lot of shorts, cough, cough, who were in short down here, probably got out of break even on that move. But a lot of other shorts may have taken the bait, and now they're stuck at the bottom. Trap. They're getting pressured. So the further up this goes, the more it's going to squeeze. And when Bitcoin squeezes, man alive, does it squeeze. This seems like this could be poised for a monster run as we move in towards the December. But really, from where we are, we're kind of in the middle, right? We're not in a big zone of support, not in a big zone of resistance, other than, that kind of inside swings. So we've got a little bit of room to grow up towards the 19,400s, 500s. And then from there, then we're starting to pressure all-time highs. And then we can start going crazy with those huge moon breakouts that Bitcoin always loves to do. All right, well, that's going to do it for this week. Like we always say, stay safe out there, keep those stops in play, and let those winners run. I hope you had a fantastic Thanksgiving week last week, and you're coming back to this week all ready to rock and roll. Enjoy the week, have a great trading week, and we will see you all in the next one. Thanks.